Thank you so much, Zain. Good afternoon, everybody. For those of you who are new to the African continent and to South Africa, I'd better begin by introducing the Standard Bank Group. In some countries, we're known as StanBic. Of course, we're not Standard Chartered, nor a subsidiary of theirs, although we do share some deep history with them. And we remain excellent partners in some instances, but very, very big rivals on the competitive arena on the African continent. What we are is the largest financial services group by assets in South Africa and in Africa as a whole. We're also reasonably large by international standards. We have about 45,000 staff. It's 45,000. They work in 20 countries in sub-Saharan Africa and in the major global financial centers, including London, New York, Dubai, and Beijing. We're privileged to look after around $135 billion in assets, and our market capitalization is about $15 billion. We offer a comprehensive range of financial services aiming to serve everyone with consistent excellence, whether they are a farmer in Uganda, a small trader, or a student in Lagos or Nairobi, a South African looking for a new car, a Johannesburg manufacturer, an international BPO business, or one of the largest manufacturers in the world, or a multinational operating throughout the continent, many of which rely on us to meet their financial needs throughout the continent. As well as being the biggest African financial services business, we are also globally recognized as experts on Africa's economies and business climates. You don't have to take my word for it. My colleague Andre Snyders from our research department is also going to talk to you later today. And I defy you not to be impressed by his depth of research and expertise. Andre is really impressive, really, really impressive. But as I'm sure that he would agree, he is not atypical. Our team really know their stuff about our beloved continent. The Standard Bank Group is also very proud of the fact that we are a real economy, purpose-driven financial services business. We didn't just start saying this when we became a business that noticed that it was fashionable to do so. We are in fact founded way back in 1862 under the same name, I might just add, except that it no longer have British in it. It was founded as the Standard Bank of British South Africa Limited. It is now just the Standard Bank. And it was set up to serve South Africa's primary export business at that time, which was the wool trade. Of course, these days, we now support a much wider range of economic activity, but we still see our primary duty as being to promote inclusive and sustainable human and economic development in Africa. Every standard banker can tell you what our corporate purpose is. Africa is our home. We drive her growth. The bottom line is that we're big, we're highly capable, we know a lot about our home country and our home continent, and we are enduringly committed to doing the right thing. For all these reasons, I'm genuinely excited to be able to talk to you this afternoon. There really are very exciting opportunities to be captured by companies in your industry that choose to set up or expand businesses here. And of course, these investments will be very good for our economy in general and for the many thousands of South Africans that will be connected to them. In other words, what we have here is a brilliant opportunity to do well and to do good at the same time. I know that BPESA and that team at the Department of Trade and Industry and Competition have discussed many of the reasons why South Africa has been recognized as the world's leading global business services destination. You heard a little bit of it from Zain, you heard a little bit of it from the Director General. But let me recapitulate. For instance, then, as you've all heard, our cost structure is highly competitive. You simply will not find any other location at this price which can match our time zone convenience, our home language English skills, and the quality of our legal and financial systems. Our labor relations are fair to both employees and employers, and therefore create stability. Our tax incentives for the sector are highly attractive. We have the necessary IT and data infrastructure, and our regulatory regime on data protection and privacy is compatible and comparable with the requirements of all the major international jurisdictions and is right there on world best practice. I strongly endorse all of these points and can confirm them from my own experience. The time zone point that Zain made is self-evident. And at Standard Bank, we certainly don't find it difficult to work seamlessly with our colleagues in New York, London, or Beijing. Then, as the BPESA team has pointed out, we have a deep pool of first language and very fluent English speakers. I'm sometimes told our accent is charming, if not quirky, but more importantly, it's also very widely intelligible. Probably even more important, we're a common law jurisdiction. So most international BPO firms will find our legal structure familiar. For my sins, I'm a lawyer, a lapsed lawyer, I might just add. So perhaps I'm a little biased, but I also think it's fair to say that our legal system is one of the strongest assets and sources of competitive advantage. Our courts have a deep tradition, stretching back centuries, in fact, of integrity and independence. They can be absolutely relied on to render technically accurate and impartial justice. And our law firms compete favorably with the strongest in the world. Standard Bank relies completely on South Africa's courts. We've never had a moment's doubt that they will do the right thing, including, in fact, in the most controversial and high-profile cases. Similarly, we use South Africa's law firms to guide us through the technicalities of both local and international law, and they really don't put a foot wrong. Of course, they're also considerably more cost-effective than their UK or US peers, I might just add. I must also add that all the major global audit, professional services, and consulting firms have large and well-established offices in South Africa, and that their skills and capabilities are fully equivalent to their international counterparts. So, in my experience, the points made by Zain and the DTIC are absolutely right. I'd now like to add a few additional reasons of my own to reinforce the case that South Africa is the destination of choice for GBS and BPO investments. As you all know, these days a large financial services business also has to be a large ITC and call center business. In fact, if you could separate out Standard Bank's engineering division, it would undoubtedly be one of South Africa's largest IT companies. The South African financial services sector is highly competitive. Our clients expect our online services to be able to match those of Google or Amazon for stability, responsiveness, and personalization. I wouldn't say we had quite reached that level yet, but we're pretty close. Two major reasons for that are the good supply of IT skills here in this country and the fact that the world's major IT companies all have substantial presences in South Africa. Amazon Web Services and Microsoft, for instance, are both just a local call away. I might regret saying this to you, but I'm going to say it anyway, and I must be truthful. Standard Bank and the other major South African banks also have excellent call center staff. I'm often amazed and humbled by their patience, their dedication, and their skill. Our clients are pretty demanding and are quite often in a bad mood, particularly at this time of COVID, when they call because people often need our services most when they're really highly stressed. What's more, the systems that our call center staff have to master are not always as up-to-date or as user-friendly as they should be. And yet our people do extremely well. At the start of the pandemic, my colleagues and I thought that, it would be really difficult to be able to work from home. We're wrong. We're very wrong to be worried. Thanks to the depth of IT skills available here in this country, thanks to the robustness of South Africa's communications networks, and thanks to the quality of our people, we've been able to run virtual call centers for almost 2 years with no deterioration in security or client satisfaction. Quite a remarkable feat. To the contrary, our net promoter scores have improved. Look, please don't try to poach our staff from Standard Bank or even from our rivals, but you can be sure that there is no shortage of the kinds of people that you need in South Africa. A third reason why South Africa is the right place to locate your BPO activities is that it's several investments in one. With your team based in Cape Town, Durban, or Johannesburg, you can serve the world's current group of major English-speaking markets very efficiently. And your people will have no trouble talking about the NFL or the UK Premier League or the Indian T20 cricket. Aussie rules football might be a bit of a stretch, but we can learn. And in the meantime, we can certainly discuss rugby with our Australian and New Zealand clients and celebrate New Zealand beating Ireland on Saturday. There's actually a more serious point, however, behind the sports talk, and it is this. South Africa is a long way in geographical terms from the world's largest economies, but our economy is very tightly linked by rich webs of investment, trade, and personal relationships to those in the United States, the United Kingdom, the EU, India, and to China. You will find it easy to source goods, services, and expertise from all these places in any South African city. Further, and very importantly, by making an investment in South Africa, you can also prepare to serve the next wave of major English-speaking markets. Our large and very fast-growing neighbors to the north, Uganda, for instance, is projected to have a population of 100 million people by 2050, and its economy is growing steadily at 5% or more a year. There are already 115 million Ethiopians, and that economy grew at around 8% a year in the decade before the pandemic. Africa's markets will expand rapidly in the decades ahead as our continent continues its fast and steady economic development, very dynamic. And if you want to buy in the African century, South Africa is the place to start. Of course, like everywhere else in the world, South Africa has a fair share of problems, but we've overcome most of them. A lot of our blunders are self-inflicted, and the only good thing about self-inflicted blunders is that you can stop inflicting them. And that, I'm very pleased to say, is precisely what we have done. Our national electricity company is now well governed and well managed, and many thousands of new private sector megawatts are entering the system over the next few years. Similarly, the logistics sector is being energetically reformed, with much greater private sector participation being attracted into freight rail and ports. Just last week, for example, the Minister of Finance undertook that private operators will have access to the rail network before the end of next year. Just to give you a sense of the large scale and broad sweep of the structural reforms being undertaken by our government, I should also mention that the national airline has secured a private sector majority shareholder, that the integrity and efficiency of our revenue service has been fully restored, and that our e-visa system has been completed, making it far easier to attract tourists and business people from some of our most important trading and investment partners, including India and China. Let me talk a little bit around the stability of South Africa's macroeconomic policies. We're a particularly difficult period from 2008 onwards. Many commentators felt that South Africa was at the risk of taking on unsustainable levels of debt, of being pushed into destructive monetary policy, and of adopting legislation that could have seriously weakened investor and property rights. However, even during the darkest periods, Standard Bank's economists and political analysts never rated those risks as more than 30% probabilities. It wouldn't be honest to say that these risks have completely disappeared, but the probabilities are now extremely low. As just released in the medium-term budget policy statement, South Africa's debt trajectory is looking a lot healthier. Under the current administration, and in any likely future, there is very little chance that the independence or credibility of the central bank will be seriously challenged. There just aren't enough votes in parliament to create a threat to security of property. And on current voting trends, the proportion of MPs likely to vote that way will almost certainly fall further in 2024. Next, political and social stability. This past July, South Africa made international headlines in all the wrong ways. And certainly, I wouldn't want to sugarcoat what happened. This was the most difficult outbreak of violence since the last days of apartheid a generation ago. But it was resolved. The constitutional democracy and the rule of law were reinforced, as some of the instigators had hoped, and it was reinforced in a way that they had not hoped. I profoundly wish that the July events had not happened, but they did show that the rule of law and the judgments of our courts will be upheld, and that the vast majority of South Africans have no appetite for violence or for extra constitutional politics. The rule of law was reinforced. I think I've hogged the mic for long enough now, but let me just end by saying this to you. The weather is wonderful. The wine is fantastic here in South Africa, and our restaurants are great, and they're extremely cheap by your standards. Come to South Africa. You won't regret it, and make sure that you stop by at Standard Bank on your way here. BPSA and the Department of Trade, Industry and Competition are brilliant, and so are our teams. We'd be delighted to help you get up and running. Please come and join us. Thank you very much, Zain.